So let's start by taking a look at how the stock markets are doing, starting here in South Korea. The main stock market opened on Friday after a big plunge in share prices in the US and other major markets around the world. This over lower than expected sales by Apple and concerns of a slowing global economy, mostly centered on China. But we have our Kim Ji-yeon on the line for us. So, Ji-yeon, let's start local then with Korea's KOSPI.
Sure, Mark. According to the Korea Exchange, the nation's benchmark KOSPI is just below the psychologically important 2,000 level in its intraday trading on Friday. This comes after it closed below the mark to the lowest level in more than 2 years on Thursday as investor confidence waned due to concerns of a slowing global economy. Institutions had sold nearly $150 million worth of KOSPI shares in a single day on Thursday. And in response, senior officials from the Bank of Korea held a meeting this morning to monitor the situation and discuss countermeasures following big declines in stock markets in the U.S. and other major countries.
Okay, well, as I touched upon in the headlines, a lot of this has to do with Apple's profit warning being cited as the major reason for the market rout on Wall Street on Thursday, but it's also sent shockwaves around the world.
Yeah, that's right. Japan's Nikkei fell by more than 3% from the previous session, while the Topix dipped by more than 2% in intraday trading on Friday. The MSCI's index of Asia-Pacific shares outside Japan gained slightly, though, by 0.2%. But all three major U.S. stock indices were down by more than 2%, with the tech-heavy NASDAQ posting 3% loss on Thursday. Apple's stock plunged nearly 10% to 142 U.S. dollars, its biggest single-day drop in 6 years. Apple's chief executive Tim Cook warned the company's revenue for the first quarter of the fiscal year would be about 10% lower than expected at $84 billion. He blamed the slowing economy in China for the weaker sales figures, and with this, pundits went on to say that the U.S.-China trade war and the billions of dollars in tariffs they had imposed on each other during the latter half of last year has affected Apple's business. Weaker than expected U.S. manufacturing figures also exacerbated market anxiety. A report for the Institute for Supply Management shows the U.S. has suffered the biggest drop since 2008, the height of the financial crisis. And the International Monetary Fund has already forecast that China is set to record the slowest growth rate in 28 years in 2018, with 6.6%. Officials from China and the U.S. are reportedly planning to hold meetings to hammer out a deal on trade this month to try to turn the current trade truce into something more permanent before the deadline in March. Mark?